Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Show. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech, and joined, as always, by Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
Doing great, and joined today by our co-founder and CEO, Bo Bruskern. Bo, great to have you back on the show.
I can't quite say if whether I've been promoted to guest or
Yes, of course you have. This is it's been too long. We got to get you back here some more. So anyway, this is going to be our last show of 2021, and we have a pretty busy news week. Lots of stuff happening in the last in the run up to the holidays here. So let's get going with, I think, what I think is the biggest story of the week. I mean, anytime you raise $1 billion in one funding round, this is not an IPO. This is a private funding round. That's news. That's big news. And so we have NYDIG, the crypto. What would you call them? I think they're like a crypto provider, focused on Bitcoin, really providing all sorts of custody and transactional services to the traditional banks and others. $1 billion funding round, $7 billion valuation. Big. It's a huge deal, I think this is something that speaks to the mainstreaming of crypto. What do you guys think?
I think it it speaks more to the fact that big FIs are looking for access to the space, and because their clients are asking for it, which is obviously the big reason. The banks aren't going to get into something unless someone says, I want access to this asset class. But I think the size of the round is important, not only because of $1 billion is obviously a benchmark that kind of puts you in a different stratosphere, but if they're putting in $1 billion into one company, and these are big multinational FIs, more stuff is coming in terms of regulatory clarity at some point in the future, because the big banks get into it. The big banks push their levers. The big banks are the ones that help write the rules, and the rules slowly begin to get crafted. I still think we're a ways off from that, but the best thing that it does for the crypto space is it just continues to push it up the ladder of importance and staying power. Because if you're still having $20 million funding rounds, seed rounds that are 10 million, and it's kind of on the periphery, and there's 10 to 15 crypto focused funds that are really fueling it, that's one thing. When you have Westpac and all of these giants, Morgan Stanley, get involved, that changes the entire conversation.
Yeah, let's just list some of those names. You got Morgan Stanley, you got New York Life, Mass Mutual, Fiserv, FIS, Affirm. I mean, these are some pretty well-established companies out there.
And really across the board from Affirm as a embedded finance fintech to, New York Life, an old school insurance company. That's the range. That's really good news for the crypto community, I would say.
And it's may not be the largest. It's the largest round in the history of crypto, but it's probably not going to stay that way for long because we hear rumors at FTX, which we've talked about them many times. They've got Tom Brady on their ads, and they are going
predictor for next year, Peter.
Yeah,
over under 10, the amount of $1 billion rounds in the crypto space.
Wow.
Over.
Yeah, I think it might go over too. FTX is going to lead off probably. But,
so that's you're already one in the bank before the year starts.
Yeah.
Yeah, and what's $1 billion these days?
Who doesn't have $1 billion lying around? Let's face it.
Well, you had 476 billion for a nanosecond this week.
I did the Coinbase. We're not going to talk about that, but that was I took a screenshot of my account with 467 billion.
Yeah, they 10x'd his portfolio.
10x exactly. 10 million x. Yes. Anyway, let's move on. We're gonna stay with crypto and stay with funding rounds. $350 million Series D. This is a really sizable round. $3 billion valuation. Anchorage Digital. I mean, this is a company that is not very old. Just that they're sort of somewhat competitive to NYDIG, again providing services to traditional financial institutions. And you look at the huge syndicate of traditional financial companies that are in this. It's really
Goldman Sachs, Andreessen, Apollo, BlackRock, GIC, PayPal Ventures,
Kraken,
Wellington Management. I mean, those old traditional names again.
Thoma Bravo. Did you mention them? Yeah,
I didn't, but that old money going into the space is starting to change the equation. And I think the other big thing, I'm not sure if it happens in 2022. I think it could, which is at the very least, the regulators are allowing banks to hold crypto on their balance sheets, which they cannot yet. And there are some ways that banks become acquirers of these assets that they don't intend to. And I'm sure there's plenty of banks out there that probably have the assets on their balance sheet accidentally. And so I think that could also, I'd be interested to see what that would do to, some of these types of firms who are basically helping the financial institutions hold and get access to crypto because they can't hold it on their own balance sheet.
Yeah, I mean the trend here is the institutional crypto custody. You've got Anchorage, and CoinDesk. I'm sorry, NYDIG. Both raising huge rounds this in 1 week, and they're very thematic, and we've got a trend, right? So I think that's the interesting thing. The other interesting thing is that one is very Bitcoin centric and the other is very ETH or DeFi centric, or at least friendly. And then, but they both purporting to do the same thing. One of the interesting things about Anchorage that I noted is that among their services are governance services, which are a really big deal in the world of DAOs and DeFi.
Yeah. No, I think it speaks to I think momentum for 2022 for crypto and if we get regulatory clarity, which is probably not super likely, but there could be more clarity than we have today. I think that's going to open up the floodgates. And, there's certainly a lot of big companies very bullish on the space. Okay, let's move back into traditional fintech, shall we say? And this just came out today. MoneyLion has agreed to acquire Even Financial, and it's an interesting deal. I know, bro, you dove into it a little bit on the details here, but MoneyLion did their SPAC deal earlier this year. They have been trading pretty steadily down, unfortunately for them. But Even's been a pretty major player. They sort of got this embedded finance thing. They used to be just really more of a referral comparison, loan comparison, credit card comparison type site, but now they've really got a pretty broad suite of offerings, and MoneyLion is going to acquire them.
Yeah, the one piece that I could not decipher, and I did some digging after this announcement came out, was where the preferred shares are priced and how they're preferred, what sort of terms are embedded in those instruments. Because
you're getting your nerdy valuation hat on now.
No, it's an important hat to wear from time to time. The deal is on what was the announcement? $440 million, it says, right? $15 million in cash. It's a $15 million deal. 1.5. Then there's $345 million in preferred shares, but those convert at $10 a share. And the company is trading at $3.75. So either these shares are underwater, and it's actually a $15 million deal with some underwater warrants, essentially, or it's more than that, but those details were not accessible to me. Maybe they were accessible. I didn't find them. So this is somewhere in the range of a $15 to $500 million deal.
Yeah. That's not a very big range.
I mean, it's from stepping back from the financial aspect to it. I think we're only going to continue to see more of these types of deals strategically across fintech. I mean, you have a lot of these companies that kind of gain traction, get a little momentum, and then kind of come up against the ceiling. And as we know, most of them are not money making and require constant funding. And eventually, 4 or 5 of these together then become, all right, this is a sizable firm to deal with customer wise and whatnot. But I see this as only the beginning of probably not yet, because I think a lot of companies think they can still do special things. But probably by 23, we'll start seeing a bit more of a consolidation as Web3 continues to elevate. They kind of begin to interact with each other, Web 2, Web 3, and the fintech companies start seeing like the room for their continued growth is not there, and then you just get acquisition and buyouts, and
the investment bankers are making money every time.
Always.
Right. Yes, indeed. We had that article about Steve McLaughlin in the Wall Street Journal just a couple of weeks ago, where talk about investment bankers making money. No one makes more than Steve McLaughlin and FT Partners, but we'll move on. Next story is interesting offering. This was an American banker. I actually got Miriam Cross from American Banker, one of the journalists there, reached out to me earlier this week to discuss this, which I thought was super interesting. There's a CDFI, NAAC Finance, and they're partnering with a fintech called Ascenso Finance, which I really don't know well at all, offering small dollar loans at really low rates. You're talking small dollar loans up to $2,500, 3.5% to 20% is the range. That is, really lower than the range that you get at Lending Club or Prosper or Avant or any of the other major lenders who don't really do small dollar loans. They do much larger ticket loans. But thing that was interesting is there is a financial education requirement before you've got to actually go through this education piece before you can apply for a loan. So I'm a little skeptical about this, whether it's really going to work, but it is a CDFI with their own community, so maybe there'll be some connection there and some influence they'll be able to have. But it's if this was just a commercial offering, I would say it's going to fail. But with the CDFI piece, it may have a chance. Any thoughts?
I love it. There's 3 things happening here. The company is lowering rates, reducing the amount of provided on a per loan basis, and sort of, I don't want to say enforcing financial education as a part of that. I'm going to assume it's going to succeed, and therefore we're at a point in the development of fintech where we're actually delivering on the promise of, building the economic fabric of all of our citizens, not just the wealthy.
Mm-hmm.
So, and I know we've done that in the past. Like, this isn't the first, but if it is successful, if it can be profitable by reducing rates at small dollars, simply by enforcing education or great underwriting or whatever their mix is, that's wonderful.
Mm-hmm.
Now there's a chance it fails, but I'm gonna hope for the best here.
I mean, let's be frank about it. It's really hard to make money in that space.
Yep.
And there essentially has to be fintech and investment and opportunity to give this segment of the population better chances than the gouging of the payday loans where they can make money on them. And there has to be some people that take that risk that, all right, commercial viability, it might not, maybe we'll break even, maybe we'll make a little money, but there, and this is where it ends up, like, the JP Morgans of the world, like, invest in ventures like this and kind of keep it afloat as kind of part of their goodwill arm, and stuff like that, which ends up keeping these things afloat for longer because the commercial viability isn't the greatest. But you need things like this.
Yeah.
You can't have payday lenders continue to gouge Americans over and over and over again.
Yeah, no, I'm rooting for them as well. I think we need to be able to offer these kinds of rates, and if they can pull it off, that's going to be fantastic. Anyway, moving along, we had our good friend Ron Shevlin write a piece in Forbes this week. He's got his top 5 trends for fintech and banking in 2022, and let's just go. They're interesting discussion points, and I pretty much agree with all of them. I feel like I love the fact that he had his number one trend, the Great Overdraft Overhaul, because that's something that I've been pushing for years now, and great to see it finally happening. And I think there's momentum behind that. Then he talks about the cryptification of banks, faster payments, embedded finance, and open banking. These are all hot topics in fintech. Thoughts?
You first, Bob.
You know where I'm going to go first. I mean, I think the big macro trend here is cryptification of everything. And as Peter and Todd know, I've been spending a lot of time cryptifying myself, and it's not easy. Like, this is a really challenging world to adopt. So I don't think it happens overnight. But I think the beginning of the crypto curiosity has certainly happened, and I think it will advance. But that is a mega trend. It's not a 22 thing. It's going to be a 21 and quite a long time beyond thing.
To me, I think the more fascinating bullet is the payments modernization, and the challenge that's going on right now to the traditional providers, Visa, MasterCard, the Apple challenge, the Square challenge, where essentially there's these new ecosystems / rails being created that kind of circumvent the buy now, pay later, circumvents, Visa and MasterCard as well. And kind of what will end up being these competing rails, these competing payments rails, where Visa and MasterCard have to continue to slash their prices. Then you have others that come into the space. And then there's the cohort of interoperability players that begin to flush out of that, because you want to connect Visa to Square to Apple to whatever. And so to me, I think outside of the crypto one, which to me is a generational issue, trend, problem that's going to be fixed in 25 or 30 years or adopted in 25, 30 years. I know people think I'm crazy by saying that long out.
2.5 or 3 years, probably.
Yeah, and then the regulators will kill it for 20 years, and then it'll come back in 25. But to me, I think that the payments thing is just so fascinating, where you go from these two dominant players to probably 5 to 10, and then how, what merchants are able to then, kind of stand up with all these different options. I think it's a fascinating thing. And the one good thing is that usually the customer in the end wins. So merchants are going to win and consumers are going to win because payments are going to get cheaper and faster.
Yep. And interestingly, that in Shevlin's piece, he doesn't actually mention that. He mentions faster payments like the the faster payments that are actually happening directly. What's the other clearinghouse and others that are doing faster payments? He doesn't mention the new rails that are coming up. That's one thing that I would have probably put in if I was doing this article. But
yeah, okay.
What's funny is we had a webinar yesterday with Ron. It was a speaker on it, and he hates the word open banking, but he used it in his.
Right. Yes. Yeah. Sometimes it's just the best descriptive word.
Yep, it's the one everyone knows.
Yeah. Yeah. Okay, let's go back to the world of crypto. This one, noticed this today, where Consensus, that's the company that is really the Ethereum kind of, I don't know what you call them, founders, or certainly they're really big in Ethereum. They have collaborating with MasterCard on a new scaling system. That's one of the big knocks on a lot of crypto, is that you just can't handle the transactions. I think it was like Ethereum right now, was it 300 transactions a second? It's not super fast. Bitcoin's like 12 or 15 or something. It's really slow. But they're talking about now scaling this to 10,000 transactions a second, and that is up to where Visa and MasterCard are like maxing out today. So interesting piece. Are we going to see this makes it look like, and this is where I feel like I get excited, where I think, okay, so we can have crypto be the payment mechanism of the future, and people can, and particularly when you get into some of the more other technology that's happening with wallets and stuff, that we haven't seen this really have this alternative payment system, but this seems like MasterCard's looking at it, Consensus is looking at it.
Yeah, I mean, this is so ZK rollups are a process that uses zero knowledge to transact at between two parties that don't necessarily know the counterparties. And
is that what ZK rollup stands for?
Yeah, zero knowledge. Yeah.
Okay, good to know. I've been hearing that term again and again, and I didn't know what it was.
And it sits up on layer 2 above Ethereum, and then every once in a while drops down onto the Ethereum blockchain and implants basically a transaction record that ratifies all the transactions that happen on layer 2 in layer 1. So that was your 30-second introduction to ZK rollups. The cool thing is the speed and the security that they've developed. The cool thing also is that these are two giants. You've got Consensus working with MasterCard, and MasterCard is taking a bold step forward. I know Visa has a really strong crypto program, but this is a really exciting thing. And it's essentially saying, look, Consensus rollups will be a viable alternative to Visa and MasterCard rails. And I think that's going to be super cool, because you're doing it on an open blockchain that is Ethereum centric, or Ethereum similar, EVM compatible, and you can do it on a private blockchain. And so there's a huge amount of innovation that can go on in that kind of an environment.
If you could package that clip, send it to your local congressman and senator, and then they'll write back, what in God's name is this?
Yeah, there's a learning curve. There's a learning curve, but
that makes me more and more confident every day in a generation to get any of this remotely close.
Yeah, well, we're not going to.
No, it's a matter of building apps on top of it, right? Yeah. I mean, look at where we were a couple of years ago when it would, and part of the reason why we all sat on the sidelines for so long, first of all, we were busy with our regular lives, and because of that, we couldn't overcome the challenge of just getting onto the thing. The only way to play in the world of crypto was to literally just go buy coins on Coinbase, and that's boring, right? But as soon as MetaMask started taking off, like, that just made it one step easier. And next year, MetaMask is going to look like, oh yeah, that was the old innovation. Now look at all these apps that have been built on top of it. So,
well, that's what I like. I think the thing around like connecting a wallet when you connect your wallet to your browser, this is a browser plugin. I've got a MetaMask wallet connecting to my browser, and everywhere you go around Web3, it just knows, oh, you've got your wallet. Do you want to connect this to
It's
this
single
way?
sign-on.
It's single sign-on, and it's very powerful. And I could see that. I mean, it's not going to take much to say, oh, you want the payment mechanism to come out, and you can, not only that, you can now pay. You can pay a penny, no problem at all with this system if you're transacting in one of the in one of the layer 2s where there's no gas fees. You can, or very, very, very minor gas fees, like a tenth of a penny, sort of thing.
The power of that ecosystem is starting to show up in alpha and beta products that I'm seeing, where all the transactions I've done, all the POAPs I've collected, the NFTs, the DAOs that I'm on, the votes that I've placed, like, activities, thumbs ups, like all that is just being collected either in Discord or on the Ethereum blockchain. And it's there's either a strong API or it's just an open blockchain. So it's all gatherable, and it creates this phenomenal biography of not who I've been since the beginning of time, but who I've been since the beginning of my DeFi experience, which is, admittedly only about 6 months. And that's a mountain of data. And so that's really powerful stuff. It's going to take off.
Anyway, let's move on. We're running out of time. I want to get to Kevin Durant, because he is now becoming they're going to be the spokesperson for Coinbase. His company, 35 Ventures, have signed a multi-year deal with to promote Coinbase. The first ad is out. Bo and I watched it just a few minutes before we went on. I actually like the ad, but you'll be seeing it on, I'm sure online or on the TV over the next few days and weeks. But they want Kevin Durant to become the face of the brand, of the Coinbase brand. And keep in mind that his company invested in Coinbase back in 2017, and I was reading, has a 53x return on paper of his investment. So he's already done very well, Kevin Durant, on his Coinbase investment. But this, again, I mean, there's more, like, these crypto firms are getting into these big name, highly recognizable stars to help them promote their company.
It's the only way you get consumers, because talking about layer 2 and gas fees, then no one will listen. But if Kevin Durant tells you something, you'll go out and buy it, or you'll think of it. And so that's why they have to do this, because if it's the other way, there's zero chance of it ever being adopted widely.
Right.
Because people are lazy, and they don't have time to spend hours a day trying to figure this stuff out. If Kevin Durant and the consumer experience is very, very simple, they can say, all right, I can buy and sell crypto, or all right, I can pay something, and the payment is free because it's in this coin, this digital wallet, and it's a lot better than using my card at a store. But that's to me, it's eons more beneficial for the crypto industry, stuff like this, than a lot of other things that they do.
Yeah, and Coinbase is really going after the mass market. They want to be the on ramp, because I remember there was a tweet by Syra Raisman from H.M. Bradley that I follow on Twitter, and she's a local Denver person. She said that if you want to get involved with DeFi, and you don't want to spend $300 on gas fees and take like 15 steps to actually get what you want to get done, it's just never going to take off until it becomes easy. People want to be able to connect their bank account, connect a credit card, and just go. And that's what Coinbase offers. But
again, you guys are just talking about trading and payments and stuff like that. What Web3 is the reinvention of the internet. With
and Coinbase is going to be right there.
Programmability and interoperability. So
that's
we're sort of in the early Mosaic browser days. And Todd's the guy from AOL who's saying, like, just ship me a CD and I'll try it. Right?
No, I'm all for it. I'm just saying the rest of society takes a really long time.
Oh, I know. You're representing. I'm not saying you're that guy. You're representing that view of just to carpet bomb the DVD. What are they called? DVD, CD-ROMs, CD-ROMs. and then they'll install it. That's absolutely true. But the bigger picture is much bigger than just payments or just trading in coins or holding ETH.
Well, and Coinbase, when you look, I listened to the Bankless podcast with CEO of Coinbase, and they want to be involved in all of that, and
right, that's true. That's true.
And they want to make it so that the mass market can use Coinbase as an on-ramp to get involved in all of that. And there's going to be a Coinbase MetaMask wallet competitor that they're going to have. And
there is an aspect to this that isn't unknown, is that when the current internet was built, there was no social media layer to it, to what we see today, meaning there's a lot of stuff that gets thrown out there that X company's bad, X company's doing thing, and this feeds into the powers that be that manage and gate a lot of this stuff in the world. And it's going to have an impact. Whether it stops the momentum, probably not, but that's why I just think there's lots of things that get in the way of it taking a very long time.
Okay. Well, anyway, we're going to have to leave it there. We have run out of time. This is our last episode, so we will see you back in the new year. It's going to be a very exciting year. I have a feeling 2022 is going to be the biggest year in the history of the world of fintech, and it's going to be so fascinating to see. So thank you everyone for watching, listening. We will see you next year. Happy holidays, everybody.
See ya.